So you want to buy property in Australia, but you've got no idea where to start. In today's video, I cover the complete step-by-step guide on how to buy property in Australia. From saving a deposit to getting a home loan, to finally settling and getting the keys. Buying a property can be a very daunting task, and you don't want to miss out on buying a property by simply just not knowing the process itself. So let's get into today's video. Step 1 involves figuring out how much you actually need to save for the property. Typically, this involves saving up for a deposit, plus any additional fees, including stamp duty, land transfer tax, mortgage registration, conveyancing, and about 3 to 6 months of living expenses. You technically don't need a deposit if your parents are willing to put up equity in their own home for your own home loan. This is where they'll act as a guarantor, and that's basically where they'll be responsible for paying the mortgage repayments back to the bank if you're unable to make them yourself. If you don't have that option, then you'll need to save up at least 5% of the property value price, and at least 20% if you don't want to pay LMI or lender's mortgage insurance. If you do decide to take out LMI, then you do need to make additional payments on your mortgage, which are effectively the insurance premiums. The bank then passes over those premiums to their insurance provider, which then covers the bank from any shortfall in funds that you are then unable to pay. So if you wanted to buy property worth $500,000 and you only had 10% or $50,000 down as a deposit, then you would borrow $450,000 from the bank, plus pay an additional $9,000 in LMI. The advantage of LMI though is that you don't have to save for a 20% deposit, meaning that you can technically get a home loan earlier. Instead of paying LMI, you can also pay a one-off low deposit premium, which is a fee that's paid directly to the bank if you don't have enough for the 20% deposit. The median house price in Sydney is $872,000. That means you'll need a 20% deposit or about $174,000 saved up. You'll also need to pay stamp duty, which is about $34,000. There's also land registration, which is $146, mortgage registration, which is about $150, and then there's conveyancing and legal fees, which will cost a couple of grand. And finally, you'll need that 3 to 6 months of living expenses in case you lose your job and are therefore unable to make those mortgage repayments. So in total, you'll therefore need about 240 grand saved up in cash if you want to buy the median house price in Sydney. Now that you know how much you need to save up, it's then a good idea to go to the bank and get a home loan pre-approval. Instead of going to banks directly, you can also go to a mortgage broker. Brokers are good because they handle all of the paperwork for you and they are able to negotiate on your behalf the best available rate from all different banks. When shopping for pre-approval, it's also important to remember the difference between interest rates and comparison rates. Interest rates just simply reflect how much interest is charged on the balance of your home loan each year by the bank. So the higher the interest rate, the higher your monthly repayments. Comparison rates take into account interest rates, plus also any other additional fees that are associated with the home loan, which can vary from bank to bank. Comparison rates therefore make it much easier to identify the total cost of the home loan and be able to compare differences from bank to bank. For example, you could have 3 home loans that each have the same interest rate, but have varying amounts of upfront and annual fees. Home loan B has a $600 upfront fee and a $300 annual fee, whereas home loan C has a $300 discharge and a $350 annual fee. These are reflected in their higher comparison rates. So for me personally, I'm always just going to look at the comparison rate, and banks are legally required to display that as well when they're advertising their mortgage products. However, comparison rates don't take into account all associated fees. They may exclude redraw fees and the cost savings from offset accounts as well. But once you've got pre-approval, you'll then be in a much better position to understand how much you can actually borrow from the bank. Although pre-approval amounts aren't always guaranteed. Banks also don't approve loans on things like apartments which are under 50 square meters, land which is over 2 hectares in size, properties which are just in really poor condition, some new high-rise or off-the-plan developments, and properties which are listed in bushfire-prone areas as well. So keep this in mind when researching and finding a home loan. So now comes step 3, which is the fun part of doing research on what properties you want to buy within your area and your budgeted price range. You can set up alerts on Domain and REA for specific suburbs and for specific properties that you're interested in buying as well. This can include the type of property, the number of bedrooms, and the number of bathrooms. Also have a list of non-negotiables as well, such as whether the place has a balcony, how far away it is from public transport, the shops, and the gym. It helps here to have a spreadsheet that contains a link to the advertised property, the number of bedrooms, the number of bathrooms, the asking price, and its distance to all of these various different things. Then you can use the REA or Domain Property Planning Inspector tool to organize the inspections. Typically, inspections are done Saturdays or Wednesdays. Set it out so you can best plan your day with the opening times and locations for each property. You can always ask the agent for extra inspections and private inspections if you can't make the open inspections as well. And it's always a good idea to go to these inspections with a friend or a family member member in case they notice anything about the property that you don't pick up as well. Also bring a property inspection checklist as well, and use that checklist to check for any mold, water damage, or corrosion. You also want to do things like look inside the cabinets for any wet areas or any damage as well. And you want to have a good look at the walls to see if there's any signs of cracks, but just be careful because a lot of vendors will paint over the cracks before the property is advertised. Also ensure that there's sufficient ventilation and that noise isn't an issue either. Inspections are the only opportunity that you have as a buyer to check for things like noise pollution. So it's really important that you have the confidence that you're buying a nice quiet place, especially if you're buying an apartment that's on a busy road or highway. If you're interested in buying the property, you can then ask the agent either in email or at the inspection for a copy of the sales contract, as well as a copy of the strata report if you're buying an apartment. Both of these are extremely important because the strata report will tell you if there's any issues with the building, as well as the amounts that's in the sinking fund as well. Sinking funds and capital work funds are basically just money kitties that have an amount of money that's paid by the residents' strata fees and are used by the building committee for the ongoing maintenance of the building. It's also going to allow you to know more specifically the water rates, the council rates, and the strata fees as well, which you can then incorporate into your 3 to 6 months of living expenses. It's important to remember though that even though strata fees might be expensive, this isn't necessarily a bad thing, because you want to ensure that there are sufficient funds in these sinking and capital works funds to allow for the payment of any major works to the building as well. Otherwise, you'll have to fork out extra fees, which are known as special levies. Also, check the strata report for any major defects. Records should show a complete list of any upcoming works to the building. Major issues with new buildings include waterproofing, concrete spalling, and combustible cladding. Personally, I would never buy a new high-rise apartment with the Opal and Mascot towers. And this is why I would prefer buying an older building that was made in, say, the 80s. However, there could also be problems with old buildings as well. These older buildings that were made in the 60s, the 70s, and the 80s used a thing called magnesite, which was used to level the floors. When magnesite absorbs water, it can then cause concrete to expand, and this can potentially cost up to $100,000 to fix because it has to be a very invasive fixing process. So just buying an old property doesn't guarantee you 100% safety against any building defects. Now that you've inspected the property and you're serious about buying it, it's then a good idea to list the help of a solicitor or a conveyancer. These are professionals that look through the contract of sale, which is provided to you by the real estate agent, and they will advise you if there's things in the contract that need to change. Conveyancers are typically cheaper than solicitors, but both of them just really do the same thing. But it is important to get recommendations on conveyancers or solicitors from your family and friends. They'll also protect your legal interests as well when it comes to the settlement period. If they're really good, they'll also help you with setting up a professional inspection of the property before you go to submit an offer. Solicitors will then draft up a recommendation of changes to the contract of sale, which you can then submit back to the real estate agent of the property, who then submits that back to the vendor, and then those requested changes may or may not be accepted by the seller. Before you go to submit an official sales offer for the property or go to the auction, it's important to arrange a professional inspection of the building as well. This includes paying a professional building inspector to do an inspection of the property and write up a report of any issues or defects that you may have not initially noticed during your first inspection. These professionals will then provide you with a pre-purchase property report. Things that they'll pick up on include cracking, safety hazards, and issues with the roofing as well. Now, this is typically done before the contract of sale is exchanged, but it can also be done afterwards as well during the cooling off period. Building inspection reports are really important because you won't be able to notice any of these defects or problems during your 30-minute inspection. It will also give you the opportunity to go back to that property again a second time to inspect it and see if you do really like it. It also allows you to know in advance what the problems are. You can then use that information to negotiate on a lower price for the property by telling the agent you have to repair certain problems. But these reports won't cover every single detail. If you want to cover minor defects, you'll need to ask for a separate special purpose property report, which just costs more money. And it may be worthwhile doing all of this before you engage with a conveyancer or a lawyer to review the contract of sale. Building inspectors also typically don't do pest inspections, which is a separate thing that needs to be done as well. If things are moving really fast, then you can always do this after submitting an offer for the property. But in New South Wales, you'll only have 5 business days to do this. And most consultants need at least 2 to 3 business days to do an inspection. You can then rescind the offer on the basis of those property inspection reports. But in New South Wales, you'll then need to forfeit 0.25% of the purchase price. Cooling off periods also don't apply at auctions. If you're happy then with a property after doing all of the inspections, you can then submit a formal offer for the property in writing. If it's a private sale, then you submit a formal expression of interest. If the property though goes to auction, then you'll need to show up at the auction and bid an amount that you're willing to pay for the property, although you should certainly not bid above of your pre-approved amount from the bank. If it's a private sale, then the real estate agent is then legally obliged to pass over your formal offer in writing to the seller of the property. At that point, it's then the agent's job to get the highest possible price out of it. So it's really important that you feel comfortable negotiating. Don't take things personally during the negotiation process. You also don't want to let a real estate agent walk all over you, and as a result, you end up paying an extra 10, 20, or 30 grand for a property just because of the negotiation process. So in this instance, it's always important to start your negotiation with the lowest possible price that you're willing to pay for the property. The agent will then come back to you after that with a much higher price and a list of whole possible reasons why you should pay for that higher price. They'll then put pressure on you to increase your offer price. And real estate agents are really experienced and very good at doing this. But just don't fall for the pressure, because there's no way of knowing whether their claims are true. Don't get emotional about the property either. There's always going to be a whole bunch of other properties that are listed on the market that you can buy instead. Once you go in with an initial offer as well, you can't go any lower than that. So just make sure that your initial offer is as low as possible, although not too low so that it's just insulting to the seller. You can, in this instance, hire a professional to negotiate during the sales process on your behalf as well. Once you've agreed on the price, then you can finally sign the sales contract. And that sale is finalized once it's also signed by the seller as well. The bank will then do a valuation of the property as part of your home loan approval process. If you've already got pre-approval, then this whole process is a lot simpler and smoother. And this is why I would always recommend getting pre-approval first before going to any of the inspections. Once your home loan is approved by the bank, they will then issue you with a mortgage loan contract, which you'll need to sign before you can move into the property. You'll need to work through your solicitor and your mortgage broker during this process. Then you may need to also deposit your funds through your solicitor's trust account as well. Just make sure you sign your loan documentation as soon as possible, as all of this has to occur during the pre-agreed settlement period. Finally, it's always a good idea to do one last final inspection before the settlement day, just to make sure that the seller hasn't done any major damage to the property as well. This inspection can be negotiated and agreed to prior to signing the sales contract. If you're then all good with the property and the settlement has gone through, then you can finally get your keys from the real estate agent. Once you've then got the keys, you can then finally move in and enjoy your new property. Thanks so much for watching today's video.